So for the winning trade, I'm doing Zscaler, and for the losing one, I have CERT. Okay, so ZS, how did this come to my attention? This was one of the 2020 performer. It was on the gappers list since May. So this came out of the big base around July timeframe, and I was watching for it, to kind of set up again. September was its, to use Oliver's term, the first extension from the weekly, and it started basing, and that's when the market started pulling back a little bit as well. Late August, it showed up in Richard's, top 50, which I keep track of regularly, as well as Ben's from Pattern Profits focus list. So, this name started popping again, saying it's showing relative strength as compared to the market, which was in correction at that time. And it did break the 50-day, but, recovered pretty quickly. And then right around here, 11th October, if you look at S&P started pulling back a little bit, 7th, 8th, and 11th of October, and ZS was, showing RS at that time. And on 11th, it was actually decoupling, and that's the note I made here, that S&P made a low compared to the previous day, and ZS actually made closed in green. I had my favorite setup about DTLs. I also have anchored VWAP kind of placed from the recent swing high. I'm still studying this. I haven't really developed an edge on this particular method, but as I learn more about the market and how the price and volume and the market cycles work, I possibly feel like I can, maybe at some point I'll develop an edge, but I don't think I really need to use this anchored VWAP at this point. But anyhow, so on 11th October, this was decoupling, and then market started to perform the day after. So I had on 12th of October, I had placed a position high. So that's where I entered, and my stop was low of that day on 12th, and started working immediately, and then we made good progress. What I do or had started doing, and you can see in my routine as well, that I immediately place my profit-taking orders, conditional orders, so that if it makes 5% progress, it gets sold immediately, partial position. And I also have a conditional stop loss. So in case it goes against me, I'm stopped out quickly. So anyhow, second day, a third of the position got sold, and I'm still carrying the rest of the 2/3. And few days later, selling at 10%, another 1/3. And then right around 19th and 20th of October, we were in growth, we were experiencing a stress test. Didn't really show up in S&P as such, but ZS, if you can see, was coming down, really forming a nice bull flag on lower volume. So I added another position through this flag, and forgot what the stop was must have been the low of this particular day. Anyhow, ZS has been strong since then, and again, selling 5%, 1/3 of that new position at 5%, still keeping the remaining core here. I do try to keep it as much as possible and get as much juice out of it as possible. So 5% got sold here, or at 5%, and then another 1/3 got sold at 10% here. So really right now I'm carrying 1/3 of the original core and 1/3 of this bull flag position. And so 10th of I think 9th and 10th, we saw some serious stress test, and ZS, I wasn't planning on selling. I was really thinking I would, carry this name as much as possible, as long as possible, up until it breaks 23 EMA, which is my rule. But right around stress, a couple of names. I want to say ASAN or something, but anyhow, poor execution. It started putting stress on my equity curve. So I proactively sold on 11th of November just to protect my my progress. And yeah, so total gain on this whole trade was about 11.5%, which gave me, you know, nice 6% pop in my equity curve. The only reason for me to sell ZS at that time was because I performed poorly or you know, did poor execution on other trades that I had planned. If I would have kept it, you know, learning from Oliver's class, probably would have sold some here when it broke the 8 EMA, which I track, and rest probably here on the break of, because again, you know, gapping up and sold down. So probably here is where I would have sold it. Hindsight, selling it here is probably, you know, wouldn't have made any difference if I followed my rule, but still think this was the right decision just to protect my profit, my progress. So that was quick rundown of winners. Should I go into losers or any feedback on this one?
Yeah, I guess
one of the things I've picked up from Oliver is these unfilled gap ups.
Yep.
They're really big. So I'm actually working on like a TradingView script that would like mark these for us. I think these are really key. That's something I didn't really look at as a positive until, you know, conversations with him. The other thing I would point out here is this particular bar. Whenever we see this was earnings a day as well. So they reported earnings, it rallied up, or it opened up and then came right back down. So whenever we see this bar, this is the end of the trade, because after this, even though it might come back, do something, but the ranges are now really wide, right? It's a character change. The stock already started changing character here. It came up, did a whole earnings thing, got slapped down again. And at this point, if you're long from this spot, this spot, this spot, and this spot, the trade is over because you're losing your KMAs. It's really big ranges. Like this is a huge range, right? Some traders say, you know, I want to wait for end of day, but you're selling from 370 to 310, which is sort of crazy. And we're on the daily time frame. We're not even on a weekly. So that's a huge, you know, it's just telling you that it's time to base now and get out of the way so that you don't end up giving all your gains back from right, you know, these areas right here. The only other thing I would say is when a name gets extended and you're expecting a pullback to come in and you're tracking it versus the 8 EMA, do your math on, you know, when it comes in this much, this is where I'm going to be, so that on this particular day, you know where, like you just know your math at that point, right? And when you just calculate it and say, if it comes back into 8 EMA, this is what the situation is going to look like. When it actually happens, you've calculated your move rather than, because it gets really emotional, right? Because you're giving back 1 day and about 2 days of progress on this name. But it was I'll cover this in the sell video, sell rules video that I'm publishing tomorrow. Is if you're in the consistency phase and names get extended, make it a habit to sell some of it, because when it comes in and you're in the consistency phase, you get really emotional about things, right? So if you sell some up into this action, you can possibly sit through this action and let it break down below this EMA before you act. If you're in the performance phase, it's different because you're sort of expecting, you know, this is stretch, you know, this is unlikely to keep going like this, right?
Right.
So in consistency phase, you have emotions involved. You're still developing a feel for the market. You get really, really emotional on this day. It's like you just sell because something is down, right? Because you haven't sold any into strength. So
Right.
making a habit of just when it gets stretched, it's okay to sell some. Like the idea is not to be perfect and like catch this and then buy this and then sell this and then buy this, right? So
Mhm.
that'd be the only thing.
So I have a few things. I think you bought this stock really well, ZS. You had the launching pad with all the moving averages converging here. I
Right.
also like how you pointed out the Anchorview app. I've noticed a lot of nice flags up the right hand side, kind of form right under that or right at that level, and then they
Right.
have that pop, which your first buy was at. So that's great. Um, yeah, I like how you pointed out it was riding the 80 EMA the entire way up, and the 10-day, the 10 EMA also. Um, and I would kind of use that. I would notice that character, and then yeah, this bar is kind of a red flag or at least a caution sign for me. And depending on consistency performance, you might be letting your position go at that point. Also, this candle for me is stalling action. You
Mhm.
had it kind of reconfirm out of this flag. Excuse me, the prior candle here. So using Oliver's technique, you might want to set your stop right at this level.
Right under. Yep.
And then here you have a gap up, close down, and on higher volume as well. So for me, that's stalling action. And then, yeah, that's confirmed with the pretty negative bar the next day. And I think the entire group was kind of under pressure at this point. I think
Mhm.
Crowd, Pan W as well. So kind of recognize the overall group action as well. And then, yeah, 100% agree with Ray. If you have a gap up on earnings, you expect that to go. You don't want that to close below these highs, and definitely you want to be out before these lows is what I would say. But overall, I think the execution, especially on the buy side, was was really good, and I think your sells were pretty decent as well. Maybe selling this last one third in the middle of nowhere.
Yeah.
Maybe let that go to the ADMA or recognize
Yeah.
the reconfirmation, that type of thing. But otherwise, I think really well done.
Yeah, and when I was doing my emotional review, what I noticed was I was, although I had decent position size when I bought these, I was still overall underexposed, and the market was making so much progress. I'm like,
Yeah.
at that point, I wasn't really chasing. I was still working on good setups, but this was late, kind of late in the cycle. So that's why I got chopped up on my execution on other trades. And again, I didn't want to give up progress. I'm like, you know what? Let me just take what I got and just run with my money. So that's what I did here.
That's actually a really interesting point. And a lot of people go through this is um the good trades. We sell our good trades when we make mistakes on our bad trades.
Yeah.
And it's almost like self-punishing yourself even more after your bad trades.
Mm-hmm.
That's just more a psychology thing where you see, you're giving back dollars elsewhere, and then you start giving back dollars on your good trade, and then it's all emotion and like
Yeah.
anything that you do in the markets, every action just has to be, will I do this the next 10 times when it happens? If the answer is no, that means you're acting randomly, and randomness just
Right.
doesn't yield any sort of performance in the long run. So that's actually,
Yeah.
yeah, I'll discuss that as well in the sell video. It's going to be out tomorrow.
Yeah. No, in hindsight, I mean, really, my math probably was off, and that's why I felt that pain here on this day. So this was an emotional action on my part to sell that. I noted my emotions later as well. Like, man, I sold my core and everything here, and this name just keeps working. So anyhow, so that was my winning trade. The next one is CERT. So this one came into the top 10 report on 19th actually, and it was supposed to be for the 20th. So really, first time I saw this name, and that night I was doing some analysis, and we were making progress. This is same time frame as the October BP reclaim. Anyhow, it was setting up nicely. This was the entry and stop recommendation. Well, I wouldn't want to call it recommendation, but suggestion in top 10 report. Couple of things I did here was I didn't look left. So I didn't zoom out enough. If you zoom out, you see 40 is actually around all-time highs. So, just expecting the trade to work right away was, a faulty assumption on my part. Second, I try to make the trade my own. So, try to find some intraday techniques to enter. And that's why, I got stopped out immediately the same day. Tried to enter through this, call it consolidation. The other thing I did wrong was, and I have fixed it since then, is in my Google sheet that I used to punch in the size, position size, the entry and stops and calculations, I didn't have like a clear indication of my open risk I was taking. So instead of working with the open risk that I'm going to be taking, I actually just position sized it based on the dollar amount. So which ended up giving me more exposure on this name that I should have. So, which obviously, when it did not work, I had to give up some progress on my EC on that. So just one day, tried it, it didn't work. So, some of the notes I made here was, I did not look to the left, what's going on here. And then, earlier on, should have expected some pressure at all-time highs. Sized the position incorrectly. Instead of using position portfolio risk, I looked at position size. This was the other comment I made. So, I wasn't able to get enough exposure early on. So, so I was trying this, or maybe in a hasty way, probably. Too tight of a stop, which, ignored the top 10 suggestion. The other thing I did wrong here was, once this did not work, I moved on. Really, after 3 days, it did work. Set up nicely again. Failed later on, that's a different thing, but it did give us a good entry, another flag here to work with. And in hindsight, what I did not notice was this flag was probably a better place to enter. Right after the quick couple of days of progress. Again, I'm making note of these after Oliver's class that, make quick couple of a few days of progress and then look for, dry up on volume and flag set up early on in the trend. So it gives you a good run. Later flags would tend to fail, I guess, at that point. This is not later, but so that was my failed trade. Any feedback on this one?
Richard, you got anything?
I think I mean it's a stop out. So I think overall you touched on the points that are worth noting. Sized it a little bit too high. But yeah, my own suggestion would be kind of keep it on the watch list because it did set up nicely with 2 inside days after it. Yep. But other than that, I don't have too much.
Yeah, the only other thing I'd be being aware of is if it's early in the cycle, and it's shown RS or it was acting well as the market came out of it, right out of this cycle. I'm not sure if you could see my annotations, but
not yet.
I'm not seeing them yet.
Weird.
You could use Zoom. Oh, there they come.
Good now.
Yeah. So if we're early in the cycle and a name is coming out and it's shown characteristics to the left of the cycle when we were under the bolded pivot level, the probabilities of it working more often than not, the probabilities of it working are very high, especially if it's, the first one out. One thing I do look for is, when it got above this 35 mark, right? And it came back, and I'm assuming this name came back in and held the 35 mark, right? Now, this is a structural flag is what I call it, right? declining tops line above the 35 early in the early in the cycle. Those things combined will give you a performer more often than not. We saw that with MTTR recently. Came in off of highs, built a flag above 20 or 25. Just can't remember. But the idea is that flag was built above 25. So it makes it a structural flag. We were early in the cycle where we reclaimed that, the boulder pivot level, even though it was for one day. And then that name was first out and up like 22% in a single day, right? So that's combining one, you're early in the cycle. Two, it's a structural flag, right? Where it's holding 35 spot, especially this guy. When it came in, it held 35. Just these two things combined, if the cycle keeps going and we get day 2, 3, 4, there's no way that this stock won't perform well whatsoever. Now, what I like to do is, if I'm entering this, I'm either entering right into that 35 area, so that it might be 36 with stops with 35. I know Ross's entry is basically the tops line of right here, right? So the way I'm using it is, okay, now this name's on my radar. Now I focus on, what's the entry tactic that I could use, and then sort of formulate it accordingly. So I would have, tried to maybe get closer to 35, 36, and then use this thing as an add-on entry, so that, I'm finishing off my position sizing here after it confirms, and then see if I could get a run like that. But just the key takeaways, knowing where we're in the cycle, what has it done when we were just about to start the cycle, right? Those two things, plus the flag itself that it built right above that 35 spot. These three, those three things alone, the probabilities add up quite a bit. So
that entry tactic, Ray, I guess one has to be in front of the screen, right, to see where it's, where is the best price you can get.
Yeah, or when you receive the top 10, just looking at, if this thing's coming in, or what exact day did Ross put this on?
I think it was 19th night. So it had already crossed this flag.
Okay.
Yeah.
Okay. So if it was right here, right, then I would still take into account the fact that this whole flag that it built was above 35. Right. And the probability of it working through Ross's pivot will be a little higher at that point, because we're, again, early in the cycle, and all that stuff sort of plays into it as well. Yeah, that's all I had.
All right, that's all I had. Thank you, guys.
Thank you.
Screen share.
Okay, hello.
How's it going?
Share my screen here. Good, Richard. Nice to see you live, and Ray as well, and the rest of the crew here. Oh, sorry, just a second here. Just there we go. Okay, share. Okay, so this is my son Izmir here, and we're kind of learning to invest together. So our analysis is not quite as detailed. So thanks for letting us just be on anyways. I think it's a good learning experience for us. So I will turn it over to him.
So hello traders, and Richard and Ray. Today we're going to talk about a stock called Unity Software. I learned about this company from playing the golf video game. We looked at this stock in MarketSmith in September, and we noticed the good revenue growth for several quarters. And let's dive into this stock.
Okay, so we used stock charts here, and you can see in the top frame the RS is in a good positive uptrend for many months there, so we like that. And the stock also broke out in really strong volume. And the way we trade, we have to look for longer term position trades, partially because I work in the financial industry, so I have all these kind of compliance hoops to sort of jump through. You have to get a trade approved when you buy and sell, and so it's a bit cumbrous that way. So anyway, so we watched the stock, and then we bought into it in September, around 140 there on that circled breakout there, and then we needed to be a bit patient with it, and it did fall back. And one of the things I guess I'm trying to work on is having stops, but again, I have, I guess, work issues with that. So we sized it accordingly. But anyway, so we held in there because we didn't think anything really had sort of fundamentally changed. And then what happened after that?
So as the stock kept going up, there's a warning sign. On one of the bars is an upside down hammer.
Over here?
Yeah. The inverse hammer means that the stock is likely to go down, and the stock wasn't able to keep its gains that day. As a result, we decided to play it safe and sell the stock at 198.
Yeah.
It went a little bit higher, but then it's now about at 140.
Yeah. So so we saw this first inverse hammer, and then sold it the next day, and then it ran up again. So that was tough to watch, but I think it was still the right risk management thing to do. I wish I had bought some puts up here, but didn't get around to kind of acting that fast. So I think, and so that's basically the trade. It did work out on this occasion. And Izmir has a few other closing comments before you guys can give us some feedback too.
So the Trader Line, what I like about Trader Line, there are lots of quizzes to make sure you get the concept, and that you can, if you can't read the concept, you can watch the video because it's kind of complicated for me to read it. And then when you start Trader Line, they make a lesson about getting to know the people. And then
so that's a wrap, and we hope you have a nice weekend.
Awesome. One of the things for a longer term time frames that was discussed in the Oliver Kelly Masterclass is the Ignite bars, where the ones with big volume that show up, something like this with big volume. And how he treats it is, if he gets an entry on this day, his stop is going to be sort of the low of that particular day. And the fact that it's an unfilled gap plus an Ignite bar. So basically Ignite bar is something that just comes out of or blasting out of a range with like clear as day volume that shows accumulation. And I feel like that's something that could work really well for longer term folks, where when you see an Ignite bar, you could either place the order, some sort of limit order right in this range, right? Or just the range of that particular bar, so that when it comes in, you could catch this sort of the longer term move. Ignite bars, again, that are early in the market cycle will tend to work a lot more. And then folks with longer term time frames, with limitations on their trading, can really make this a setup that they look for quite often, right? Especially if we're right near that follow through day area and you see an Ignite bar, that just sort of your eyes should sort of light up to that, to sort of look for that. And that could be like a go-to setup where you'll have a few days to sort of position yourself in it, or place several limit orders as the stock comes into that volume support, so that you could get a move out of it for a couple of weeks, days. And sometimes if the cycle's really, really good, like it was for 3 or 4 weeks in 2021 or just 2020 itself, that could be like a multi-month type of move where it could just keep going off of that Ignite bar.
Okay, thanks.
Yeah, all I'll add is I like the overall shape of the chart here, whether you want to call it a inverse kind of head and shoulders type thing. I'll draw it in a second. You've got a pullback, a deeper pullback, then it starts to make the last move up, and then we get this kind of constructed base. And yeah, trading with restrictions, I'm sure adds all the complexities, unfortunately. But yeah, managing risk with position size is a great way to deal with that. And I think your sell was really well. You sold really well. We were extended off. I'm not quite sure what this moving average, probably the 50-day here.
Yeah.
So yeah, once we start getting extended, see those wide range bars and inverse hammers, that's a good place to start to exit your position as it kind of confirms the downside. So I think that was really well done.
Okay, thanks, guys.
Yeah, thank you. A great job, Izmir.
Okay, thank you. Just gonna stop. We have to stop the share in a second. Stop share. Okay.
Perfect. Who's next on the list? I think Atakan. Apologies that if I'm not saying that right.
Yeah, it's okay.
Cool.
Can you see my
Not yet. There, it's coming up. It's coming up.
Is it okay now?
Yes.
All right. I'm a kind of a new member to the Trader Alliance, so I haven't been in a complete market cycle since I joined. And the cycle that started after the October 14th was my first cycle. So I was kind of learning how to be positioning through the cycle with the good characteristic stocks. And I was trying, so I was still like a very beginner phase. And after I learned some couple of concepts and then watched the Oliver's class, I was screening for stocks that I could be trading. So the one that I wanted to talk about is PubMatic, and I want to hold on. Yeah, I want to show you what I was seeing on this day particularly. So this was 23rd of November, and if I take a look at the race cycle, it says it's kind of we were kind of late in the cycle, and a lot of distribution days happened. So I was like thinking, okay, this could come to an end very soon, and I can be planning on a very quick swing trades. And sorry, I want to apologize for my English. It's not my native, so I can be, hard to understand sometimes. But this is what I was thinking. Okay, since we are very late in the cycle, I could be doing a swing trade based on the concepts that I learned from Oliver. Yeah. So I was looking at this one, PubM, and also on this weekly chart, I saw a big downward trend line breakout with a huge, like, highest volume ever. So I thought, okay, this could be one of the confluence areas that we all talk about. So on the daily as well, since this bar is not the one that we really want because it's very low DCR and close on the very low of the days. But I thought, okay, we are maybe in the late cycle, so this could happen to this kind of stocks. And then on the next day, it made another run up. So I said, okay, maybe this has some potential in it. And then it came back all the way to the 10 EMA and found higher lows and support at 10 EMA. So I said to myself, okay, yeah, let's try this bounce from the 10 EMA and try to enter like a day trader and then manage like a position trader. But since, there are so many questions in my head that the cycle could be at end and Ray already got 100% cash position. So I was like, okay, let's make it a very quick one. So my position size was not very high, so around 5 to 10%, somewhere in between. So, and this was my plan. And then I went back to the hourly chart, and is this, I want to zoom here, but hold on, sorry.
Do you want to fix the scale? Yeah, there you go.
Yeah, because I see myself and I cannot fix it. So on the hourly chart, I was looking for a wedge pop, and then if I can get a wedge pop on the hourly and close like a wedge pop, I could be buying and then putting the stop low of the day. So, and as soon as the day started, I actually got a wedge pop and I entered here and put the stop here. So I had like a $1.5 of a risk. So I was aiming for $2 of a gain. So it should be around, $40-ish where I should be getting out of the position. So as the day went on, I got the traction. So I was, okay, this trade is working, and we were, kind of stalling and didn't want to go above the 40 level here. So I was like, okay, I am almost there. So if we can get a close above a $40, so I can put a stop at 40. So if it wants to break 40, I could be out, but it never happened. And the next day, on the 26th, as you can see on the journal, we opened below the BP. So I closed the position like for a little loss, I think, because I was, if it's not above the BP, I should close the position anyway. So I was kind of acting greedy because I didn't want to close the position on the same day. So I wanted to check if it can go above 40 level, but it never did. So yeah, this is the one that I think it was a winning idea, but the losing execution. So yeah, this is one of the trades that I wanted to talk about, like a very quick swing trade. Yeah, that's it for this stock, and I have one more if you let me talk about it later.
Yeah, I think you really nailed it with, we're late in the cycle, so your position sizing is a little bit lower. I think you waiting on that to get above 40 or punch through 40 so that you could scale into strength. I would do that over a span of the next 50 trades. I would have sort of done the same thing. And the idea is when we open below the bullet pivot level, we're going to see stocks that are going to, everything's going to be under stress at that point, because just when we're below a trend level in the markets, we see this stock. So at that point, it's about, minimizing your loss, which I think you did as well. So I think overall, in the grand scheme of things, is this going to happen again? Yes. Is there a way to minimize it? Probably just knowing, where enough's enough and you need to get out, right? What some traders tend to do is, say you entered right into this area, right into this, and then the stock comes back in. Usually they don't tend to wait. The market's just saying, we're below the BP, and then we might get this, and they end up selling here instead of listening to the market at this point, right? Yeah. So, yeah, I mean, just keeping your loss minimal. When we open below that bullet pivot level, you take the hit. And this one, it looks like it wasn't too bad, right? You're about 1% to 2% at max, depending on where your average entry area was, or maybe you entered right around here, right? Yeah. I mean, just listening to the market. I'm not sure what happened on this after the fact. If you,
do you want me to put it forward? Yeah.
Yeah. Let's see. Yeah, there we go. Right. So the stock's under pressure now because we're below the BP level, right? Yeah. Instead of it would have been a much worse sell if you were to sell around these areas, because that's about 36.50 and your entry was about 38. So that's 2.5 points now. Instead of, if you just listen to the market right here, you could have got out maybe 50 to 75 cents, right? Loss. So
yeah, exactly.
Yeah, I don't have too much to add. Yeah, it looks like on a daily chart, this was an inside day and up setup on this day. I'm not seeing too much volume come in, so I was wondering if you were looking at the relative volume at all when you're buying your position, or looking at the volume come in the hourly chart.
No, not really. I was confident that the volume was drying up, but I wanted to play the price and then let the volume come later. But
Gotcha.
it never came. You are right. It never
Yeah, so
came.
on this one, I've been watching like the 40. This is where I feel, you know, with price, volume is going to come in through 40 mark at some point. So
yeah,
we'll just have to wait when that happens. Because we had this area where it attempted 40, and I did trade it on this day. I don't know if you guys remember. It rallied up quite a bit in about 3 bars in the first 15 minutes of the session, and then it reversed on its head and then closed right back below 40 right on this day. So that just makes 40 a pivot. Like it's had 40 pivot failure, 40 pivot failure, 40 pivot failure, 40. Even traded this day, 40 pivot failure. And then this one is also a 40 pivot failure. So at some point, if we do get a market in a trend, this is gonna go above 40, come back in, hold 40, show RS versus 40. You know, it's gonna do everything that it needs to do, and then it's gonna see if it can trend up and out of that area. So it'll be interesting. I mean, this particular day gapped up with HVE. I'm sure you guys remember this is HVE, but then the market was really, really bad, which really forced this name down. So it's one of the reasons I'm still giving it, you know, it was really strong most of the day, but the market got really bad in the afternoon session. It just couldn't hold for that particular day for its closing range. So statistically speaking, when we see some sort of, you know, low closing ranges on these highest volume evers, the probabilities of them working lessen quite a bit. But just for context, the market was really, really bad on this afternoon session.
And in general, it's held up better than a lot of growth stocks during the recent few weeks.
Yeah, I mean, just draw a line at 40 at some point. It's gonna bust up and out of that and then not look back. But it'll take a couple of paper cuts.
Even the last 3 days, I think. Yeah, look, it's forming a pivot right at 40.
Yeah, still waiting for it to go about.
So yeah, that's all I had. Yeah.
Can I talk about Matterport? Do we have time, or do you want to skip to the next one?
Yeah, go
very
for the
quick.
next
I know. Yeah. Okay.
Yeah.
This is okay. I want to make the big one. Yeah, this is what this is one of the stocks that I traded, and I really enjoyed it because right after I watched the highest volume close studies, and I get a glimpse of an idea from Ray telling us that you should be planning on the downside when you are playing on the highest volume close, also to the upside, but not to the upside only. You should be planning to the downside also. So we all know about Matterport. It made the highest volume ever on this 15th of November. So this was the characteristic that I wanted to play, and this is the only characteristic that I am focusing on now. So on the day that it was making the highest volume ever, these two blue volume bars made me convinced that $25 area was being supported, and also on the 15-minute chart here we can see it never want to go up below 24.87, but yeah, let's run 25. Yeah, so I said, okay, if the next day I want to play when it's crossing through the highest volume close, I would want to buy it. But if it starts selling off initially, I would want to position as close as 25 as possible. So that's what I was looking, and this was the only stock on my focus list that day, and I was watching it very carefully. So it started trading the first 15 minutes, the second 15 minutes, and it's coming to 25, and I started buying very small sizes, by 25.50, 25.20, and luckily enough, I managed to buy it on the very low of this bar, and my last buy was was coming and crossing 25. So I was positioned at around 25 and I wanted to see what it wanted to do. I didn't add on the highest volume close because I was already positioned and I was very excited because it was my first this kind of a trade. And on this earlier cycle, I traded also plug, which had the highest volume 1 year, and some other ENPH, and I realized it was possible that we could get like a 20% gain from the highest volume close. So my first aim was 20%, and I told myself, if I see 20%, I will put a stop at 20%. Then it can do whatever it wanted to do. So the stock tried to go to the 30 and then came back on that day as I can move forward. So this is the end of the day. I started positioning it. So like $30 mark was almost my my target. And then on the next day, it opened up, wanted to go above 30, came back. I said, okay, let's give it one try. And then it went up 30 and closed over 30, and I put my stop at 30 level, and on the next 15-minute bar I was stopped out with the gain that I really wanted, and luckily enough it continued to sell off a little bit and I made higher lows, but this is another concept. Yeah, this is the other one that I wanted to talk about.
Yeah, and this candle we saw also on like pretty much any winner in the markets that's early or IPO phase or trying to mature in the markets. We're going to see this, like ZIM. I posted a markup on that, saw the same thing about 3 times as it made its way from 17.5 to about $60 later in the year. So just tracking these, and then also, you know, this second bar, when it comes back in and gets supported, that's one of the best trades, because you're coming into volume support, and then we see a move up and out of that bar. That could be, you know, this is something that works consistently, especially if we're early in the cycle. You can size these up quite a bit to get like a really good gain very quickly. The other thing I will make a couple of videos on, again, this is a structural flag. So we have a declining tops line. And if you just look at this low is 25.01. So this whole flag has built from a 30 tops line. This is a tops line starting at 30, and the low of this is 25.01. So this is just this flag, more often than not, has the higher probability of working than any other flag in the market, because what I call it is 30 on the top side, fails, comes back in, supported above 25. We have a 5-point range. It's building a flag. And then I think we came above that BP level. So when we're breaking that flag at this point, we're breaking that flag. I'm looking to the left and saying, okay, this was supported at 25. So the probabilities of this sucker performing in a big way, just going up a lot, are very high. So when it's coming, you could maybe position here and see if it fails above the prior day's close. That could be your stop. But the probabilities of these flags when they form, especially with a 30 top side and 25 downside around the hold numbers, it's going to work, especially when the market's just, the pressure's lifting off the market. And then again, you know, it tried to do a rally, but then the market turned really sour, like right above this 35 spot. It tried to rally above it, completely failed. And then the rest is just, there's too much market pressure for this to continue performing. So it just comes right back in at that point. Richard, I think you're on mute.
Yeah, on my side, I don't have too much to add. I think you analyzed it really well. I think recognizing that it was having trouble above 30 was really a really good spot. But other than that, I think you handled it well.
Thanks. Thanks for listening.
Yeah, thank you.
Awesome. Good job.
Thanks.
Yeah, good job. I think, Robert, you're next.
Yeah, hey guys.
Hey.
All right, we're gonna do two today, I guess. So Enphase was a winner for me, and Roblox was a loser. These are just trades I took in November, and at the end of every month, I just like to go back and look at the last month. And so Enphase was the first one. I think I handled this one okay. This was a leading group in the solar energy group. I think it was actually probably the leading stock. And the setup I'm focusing on right now, you guys always preach, you know, find a setup and master it, is I'm only trading basically high volume gaps. So this one was highest volume since last earnings. And another thing I love to see is volume gap ups within a bigger base, which on Enphase, you know, you can see here kind of this sloppy base, but, you know, a little bit of intervening VCP. Looks like it's tightening on the right side, but I just really prefer these as opposed to things that really are in a massive uptrend and bust out. I just think these work a little better. And so the second thing I noticed, and I'm doing a little bit of a study on this, is if you get a pocket pivot the day after a high volume characteristic, just empirically, I've found that these setups tend to work a lot better than if you get distribution the next day. So I know we've been exploring some entry tactics into these, and I think this is something to look at. Like, you're pretty safe to buy on the second day if you do get a pocket pivot coming through, which are these green dots up here on my volume bars. So recently I've been trying to focus more on entering at levels. I've just subscribed to the money flow service and I'm trying to get a little bit more familiar with it. But here you can see I was just buying as basically price makes new highs. So my plan for this was to always buy when we clear the high volume high. So buying some here. And I generally like to buy 2 10% positions for a 20% total. So doing the same thing on this bar here. We break out of the high and I bought some more, and I annotate all my buys with the size, the value, where my stop is. And so one thing I would love for you guys to give me feedback on is stops, because I find on some of these placing stops is so difficult that if I can't find a good place to manage risk, I just put it at 3% below my purchase point, and I'm willing to risk that much of my overall capital in any one given trade. And so that's kind of what I've done here. The red lines that you see, this was kind of taken a little bit from Minervini and a little bit from the O'Neill Disciple guys. But I like to get my stops to moving averages when I can, because then you basically are building in a trailing stop into a stock. And so that's what I'm doing here. When my original stop crosses the 10, I'm going to move this buy stop to the 10, same thing for the 21, and same thing for all these trades up here. And so you can see I think I got pretty well positioned in this stock early. This was a sell, and looking back, I don't know why I sold on that day. This is something I need to get better at. I'm sure it was emotion, but I said, trying to take some off into strength, but looking back, kind of a random trade. Really, Enphase didn't do anything wrong here. It actually had a nice closing range on this down day, and it looked okay. Here I was in tune enough to realize, hey, we're coming in under the 10-day. My stops were at the 10-day, but we were breaking the 10 on low volume, so not really concerning. And then here we get a big move out, and I bought some more. One thing I can't stress how much journaling has helped me, and I used to be so quantitative, but qualitatively putting things into words has helped me a lot. And I always do a little bit of a 3 bullet point note on my trades, but this one you can see I'm still adding 20 shares up here. I was buying 23, 22, 10. So I should really be adding less as the stock advanced, because I got lucky selling here. We broke the 10 on a low daily closing range. I didn't follow my stops, but I have a note down here that's, don't be so systematic you hurt yourself. There was a lot of distribution and growth today. Stocks did not look good, and we were breaking the 10 on a higher volume above the 50, and had a poor closing range. And so, I used my judgment a little bit and sold. But because I was still pyramiding with such size up here, I could have gotten really hurt here, and I could have probably ruined all my performance if I let it get all the way back to the 21 where my stops were. So that's something I'm trying to be careful about. And I don't think I'm quite at the reverse pyramiding caliber yet, because I'm still trying to be in the consistency phase, which I definitely think I need to be. But I think I need to do better about position sizing larger earlier and probably taking profits as things advance as opposed to adding more. And that's really all I had on this trade. Like I said, I think I kind of got lucky selling here, but it turned out to be one of my biggest winners in November. And so I'll stop there and see if you'll have any feedback on this.
So this bar is our HVLE. So
Yep.
This particular day when it comes back in, I guess one of your questions was like, how do we manage risk?
Mm-hmm.
Risk is managed when you have an entry tactic, right? Entry tactic is it's going to tell you I'm either going to enter through the close of this particular day, the very next day. That could be one. The other one is the low here is 210. It's above 210. So when I see this bar the night of when I'm prepping for an entry on this, and I'm not really sure why I didn't enter this, maybe I was in the other positions and just feeling comfortable in those names, but I would go to a 15-minute to see where the volume is on this particular day and sort of plan 2 entry areas out. One would be the high volume close, and then the other would be around like a whole number, which would have been 210. And if it breaks the low, then I'm very suspect of what this stock is trying to do at that point, right? So if it came back in to that 210, I would enter maybe a partial position, let's say 1/3, then round out that position as it comes back up above the HVC, maybe another 1/3, right? Or if you're really confident in the action in the market and the volume is there, the second ad could be, you're rounding it out as the stock comes back up. So the low is around that 210. You test it, it responds well. It says, okay, I'm trying to act well. And then the HVC area, you'll have more evidence because the volume is going to be building up for a pocket pivot, right? So I'm assuming the relative volume would have been good enough. The breadth would have been high, or the group would have been on fire, like other solars might have been doing well. So you could add a 2/3 there. And then at that point, your average is somewhere around right around here, right? Your average should still be below the HVC area. And then you can manage it on an end of day basis where it closes up really good on the day. And now you have a position you can work with, right? So your entry tactics are allowing you to manage risk by looking. So MTTR, the one that we just presented, had the same thing. Highest volume ever, right, on that bar. Then you zoom in on that bar to see, what's going on. So 25 would have been an area of interest, and then the HVC would have been an area of interest. So as the stock came back in the next day on MTTR, you could maybe do a 1/3, 1/4, whatever. Get your leg in the door. If it works, good. If, it's working for you. So now you have you have enough incentive to continue adding stock as it goes above that HVC area, right? Mm-hmm. And then you can round out your position. Maybe you add another 1/3, 2/3. Now that's all dependent on market, group, where we are in the cycle, and all 3 of those things line up. And we were early in the cycle here, then you really size it up because this setup's going to work, right? That's just relative to everything else. Like if we're late in the cycle, then my position sizing is a little bit lower because we're more failure prone. If we're early in the cycle, my position sizing is a little bit more aggressive because I feel like the trend's just about to go and we're, day 4, 5, 6, or day 2, 3, 4 in the cycle. So it's really hard. Like this, you ask the best of the best traders to how they go about it. Like I talk to Oliver just directly, like, how the heck do you go about, like, what do you do? And it's just, you get your leg in the door, and then as it develops, you really round it out. And nobody really, like, we can't come in knowing that it's going to work. Like, even on this day one type of setup, I've looked at things like when it comes back in, it does a 15-minute hammer bar, and then I could enter on that 15-minute hammer and place my stops at the low of the day. Now, that could work. But again, that's something you have to study for yourself, right? Because when we're real time, it's a lot different than like right now. The market's closed. It's much easier to talk about things. So,
Sure.
Yeah, that's why I tend to still stick to day twos. It's not easy. Like, day ones are not easy, but day two, like, I'm far more confident in, because I know I could really get into the names. Like MTTR, same situation. If it's a HVE, it makes the candle really special. If it's a HVLE, it makes the candle really, really special. So that's sort of the difference between, if this wasn't HVLE, it was just a rent, it wasn't even an HV1 or anything else, then it doesn't really, I would just ignore that type of candle there. So those are my thoughts.
Yeah, so I have a few things. First, you talked about difficulty placing that first stop loss, right, Robert?
Yeah.
So, yeah, what Ray was talking about the buys on the first two bars here, you can set that stop to break even pretty soon after it works. Then on this bar right here, let me draw here. You're breaking a little bit of a flag. I would probably treat that stop separately and maybe set it at the low of the day here. And you might be getting stopped out on this day. It all depends. But ideally, this size is much lower than what you've built down here. So your cost basis, where these two buys or these three buys here, you probably would have moved those to the 10-day moving average on a closing basis, because at this point you're up 13-12% when you're in this range. So until, this is really what I got with Oliver, until you make progress, you keep the add-on buys separate until you make substantial progress, and then you can move everything to kind of one position. Then moving forward, this day obviously is another difficult one. You're probably back to your core. From these days on a closing basis, you keep it, you recognize those on lower volume, that's good. And then I think this is a really good buy coming out of that as it reconfirms. This is another kind of breakout from a flag. And then you can move, I would actually move my stops all to the low of this day, because this is like a significant ignite bar here. And then here you've got the confluence of the 10-day moving average, as well as another kind of reconfirmation. So that's kind of how I would trail my stops up. Then this is potentially an ignite bar, but you're getting a little bit extended. We didn't really base against the 10-day moving average. We're kind of elevated from it. And then here we get, I think 12%, if I'm getting my math right, above, actually, yeah, 13% above that 10-day. So a little bit short-term extended, looking historically at the stock. So that might be a warning sign. Maybe even take a half off your position there because of the close. And then I think this sell is pretty good. We're reconfirming to the downside after this negative bar. So maybe take another half off. You got a quarter left, and let this moving average take you out the rest of the way as it breaks below this range. So that's a little bit about how I would manage that position. Kind of take it out in pieces and laying those reconfirmations, move up your stop. And then I really like the confluence of the 10-day moving average with that reconfirmation here. So I hope that helps you out. That was a little bit all over the place, but yeah, any questions for us?
No, that helps tremendously. Yeah, thank you for both those pointers. I'm definitely going to put them into practice. I noticed also, just going over this with you guys, like, I tend to buy things high in the bar, if you can look at all my buy points, because it's more like O'Neill style, and it's something I'm really trying to get better at, is really trying to recognize a better bar early, and finding an earlier entry earlier in the day into it, where I'm doing most of my trading in the first couple hours of the day now. We're back in November. I was not. I was probably, anytime after 1 or noon. So yeah, thank you guys.
And just to hammer this home, like this combo, these two bars, you'll find on a lot of stocks.
Yeah.
Like especially when these come in day 2, it makes it so much easier than day 1. Like I know everybody's fascinated about how to enter on day 1, but it's all about sizing, right? If I only size 5% on this first bar and I size 25% on the second bar, how am I going to perform on that first bar or that second bar, right? Because it's all about where you could size really well. It's not about I could buy this at 200 and have 5% position, or I could buy this at 205, have a 25% position. Which one's going to yield me a greater return? The one with the higher position size, not the one with the better price. So that's something that, like, if you study just these two bars, there's so many examples of the second day being so much, like Upwork, CELH last year, Sonos, they all came back into 2025 and really held those areas. That's where I sized them up quite a bit. I just couldn't size, like, I just don't have an edge developed in a big way yet where I could just go in on day 1, even though it's sort of like the sexy thing to do these days. But it's all about sizing. You have to look at position size. So.
Well, the next one's quick. If I have time to do one more, if not, no worries.
Sure, go for it.
Yeah, so we're talking about getting in on day 1. So here was Roblox recently. That's exactly what I tried to do. And, looking back, I had no right to do this. I had no system to do this. I ended up getting lucky with these buys and finishing up on the day. I felt pretty smart. And then, the next day you can just see it completely reversed on me. Stopped out of both my positions. So this will be a really quick and ugly one, but yeah, I mean, everyone knows the Roblox story. Had been new and canceling, had some good fundamentals in there. But this one just reversed on me so quick, got stopped out. I think I bought it back, but that's not the point of this trade. But had a horrible wash sale on it too. So yeah, but this is also where I was still using stops at EOD end of day here. And one thing I'm trying to tinker with right now is really, until I get my stops to those moving averages, I think I'm exploring the idea of treating them on an intraday basis. Just so I should have been out of, buy 2 here and buy 1 here, and I let them go down. Well, that's the wrong direction, but y'all see my point. Another 4% than I needed. So that's really all I had on this one. But yeah, this was by far my worst trade.
This RBLX has done this before, like this thing.
Yeah.
We talked about it like internally. It's either gonna go or it's gonna do this, because if you look to the left, well, I guess I'm mixing up a firm with this, but this bar, there's really not much you could do other than take it to the chin and really move on. The frustrating part is seeing it work again almost right away, right? I'm not sure like where we were in the market cycle. Maybe that could be something that to lower your sizing could be potentially something to lower your sizing on. But other than that, like if this happens, is it going to happen like 8 out of 10 times? No, probably 2 out of 10 at max, or 10 out of 100. But you just have to take it. That's part and parcel of how things go. So I would say this is a system loss, right? Where you're gonna have those, and we can like put guardrails around us and make all sort of rules, but there's gonna be anomalies that or situations that don't fit, and they're gonna be you're going to be in situations that it just doesn't, nothing that you have in place will work consistently. So you just take it and move on to the next and sort of think about, series of trades mentality rather than how do I, fix this particular situation? If you think like that, then it becomes really, really hard. Any thoughts on that, Richard?
Yeah, it's a gap down. I mean, like you said, it's gonna happen. Yeah, you just kind of have to deal with it. Yeah, I would say if it gaps down and test your costs, you might want to be out at that point, versus waiting into the end of the day is kind of what I would add.
Yeah,
And
I
then
mean,
just
when
keep
I
it
look,
on. And then I would just say try to keep it on your focus list because it did reset. Like the overall structure wasn't broken. It just didn't follow through like we like on those HVCs.
Yeah.
and
Were you gonna
also
say-
just
yeah.
like the $100 mark, right?
Yeah.
So if you have your cost basis, let's see what your average was here, 104, right? Yeah. So you just take that, and if it breaks 100, maybe sell some there, and then if it continues to disrespect, because usually again, when I'm prepping for these, when I see this, I go into the bar. So I would have had HVC as one area, right? And my second area would have been $100. So
Okay.
so I would have boxed it in and say, when it's coming into 100, how's it acting? If it's not acting well, then I sort of got to take a back seat. And then if it comes back up above 100 at this point, like right over here, I can re-enter the name and then add through HVC, and then get a rally out of it, right? There's nothing or no set rule that's going to tell you that this is going to punch you in the face the next day. So
Yeah. All right. Well, thanks, guys. I really enjoyed this. Learned a lot.
Yeah, thank you. I think lastly we got Steven.
All right, let me share this down just a little bit and then share my screen. It's not letting me share my screen. Oh, there we go. And then, all right, you see the sink or swim?
Yeah.
Yep.
Okay. I'm in my first year of doing this. Real quick, actually, something I took away from today's post-trade analysis. I've been marking up Thinkorswim, and it doesn't carry through to like a weekly view and stuff. It gets all over the place. But I noticed the guys are using, or a bunch of yourselves are using, it looks like the trading view, and it lets you do that without, I guess messing up the other chart. Is there a particular software, or is that just a feature? Because I'm working with TD Ameritrade and MarketSmith, but the trader view seems like it's a lot better for day-to-day journaling. Would you agree? Like I'm kind of making a decision. I'd like to add in that trading view so I can do the day-to-day journaling on the charts. Is that what you guys recommend, or?
Yeah, I mean, I use stock charts for mine,
Okay.
and most of my charting, I just keep it to the daily frame, or most of my analysis. But I think TradingView is a good solution for that, for sure.
Yeah, it definitely looks clean on TradingView. So I use TC2000 as my main thing, and that's the same as TOS. It doesn't follow through to the other time frames. So yeah, it would be nice if it does that.
Okay. I kind of took from yourselves creating I have like a pre-purchase activities, and then I have a post-purchase and a post-trade analysis. So I'm going to kind of jump around a little bit. I'm going to go over ARCB. I wanted to kind of stay away from something I didn't see on the TL top 10. I found this using the screener in MarketSmith, so that I'm finding, I've tried to block out the Twitter and the other noise so that I'm finding my own stocks. Because I'm in my first year, I don't need like 100% return. I'm trying to get from that consistency phase to the performance. So I've got to learn how to do the fishing or know where to go fishing. And so using the screeners, I used the Can Slim system. It meant the 100% on the Can Slim system under MarketSmith. I was here first when I did the screening, and the way that I found it actually was I've been big into Zim. Everyone's talking about Zim, so I've been in and out of Zim actually for like the last 6 months, and I noticed the transportation trucking went up on the industry charts, whereas the transportation shipping went way the heck down. And when it made that switch, I missed ODFL had already broken out of the flat base, so I started going through the top 5 trucks in this transportation trucking, and I found a ARCB was coming up and starting to form the handle. And because I'm in my first year, I'm really focusing on cups with handles more so than other tactics. And so I was like, is it going to form a handle or is it just going to be a cup? And so I kind of rolled my dice and I started to work it and was hoping that it would form the handle. And that was, part of the screening process. Was let me get back to the fundamentals. I'm getting too far ahead. I started looking at it, and so I've notate when I start to notice these things. So like in October is when I picked it up, and then I have my list, markets and direction, and all that kind of stuff. It's a leader. I'm looking for supply. Is it in a properly formed chart base, and then how close to the highs is it? Then I look at the RS and EPS ratings. And then something I pulled out of your guys' class that I put a lot of emphasis on is I like to look at the weekly charts more so than the dailies to find them. And I start counting the amount of accumulation versus distribution while it's in a base to see how it does on the accumulation versus distribution. So like if I traded AMAT this year as well, and I did not do as well, and that had more distribution or about even versus this one where we had 7 weeks of accumulation versus 1 of distribution. Hit the screener, and I've been tweaking this. So like because I'm in the consistency, I'm constantly tweaking these charts. I've actually switched up what I have there. Going into the edges, I kind of use a combination of what you taught with the edges on the technical side, but I also make sure I list out a couple edges on the fundamental side. So trucking demand, I wrote out where it was industry-wise, went from 72 to 63 to 16 when I started to get into it. 100% of my Bill O'Neill #2, and then the other stuff that I went over. I trade part-time, so I have to pre-plan all this stuff. So that's why I have these worksheets that I print out so I have with me while I'm in the field, because I'm not behind a desk. I run a home inspection business. So I'm either doing stuff for the business or I'm on a roof getting a jingle off of TD Ameritrade and letting me know what's going on because I had to pre-plan it. And so my position size is all figured out in advance. I'll go in and I try to load in like 50% of a position before I think it's going to break out. And then I make myself write out, why did you buy it? Where did you buy it? And I typically will use a 4% stop loss. And that's more for me personally. I know the Bill O'Neill said the 8%. I have a hard time stomaching over 4% when I see red on my screen. And that's just me personally. And then when I'm going to take profits is figured out as well. Because I'm in a consistency phase, I've rewritten all this here actually at this point. And that was based on the Oliver Kell class, because for me personally, I'm finding that I do better with like a swing trade, or I hate saying swing. It's more like short, and then I'll go long if the position continues to run. And so, if I get over 20%, I'm moving up my stops. But once I clear 5%, I'm at break even. And so let me jump over here because I'll print the charts, and I'm old, or I'm in my 40s, so I like to actually print the charts and actually physically write on them still. So I'll print them out and do my markups afterwards. But and that's why after being on here today, I asked about the trade view because I want to look at that closer. Here was the pivot point for the ARCB before it broke out, and I was trying to find entry points in here. I made my initial purchase back on 10/18. And I put in a quarter position at 86.18. I guess it's a little hard to see. I'll line this up to help bring it across. Then on 10/22, I bought another 28 shares. So that put me in about 50%. And then on 10/27, I got shaken out for the 28 shares at 87.45 because that would have been your, I think I had a 2% at that point. I'd moved it up a little bit. And then on 10/28, I noticed it was starting to come up that right side of the handle. So like when they form that handle, they start to come back up. That's when I started to get more aggressive about it because I knew it was going to, or I didn't know. I was presupposing it was going to be taking off based on what I see happen in the other right sides of handles. So I saw that initial one. I bought another 55 shares at 91.93. I sold another 55 shares at that time, and I round tripped it that day. And because I was just confident it was going to keep going, like I noticed I was watching the price and volume action. And so when I saw the volume starting to really push over the 50-day, over the average for the volumes, that's when I was like, this thing's getting ready to go. It's just trying to shake everybody out before it does. And so I rebought. And then of course I got shaken out the next day. And some of this, wasn't using candles at the time. So like some of this is happening while I'm using the MarketSmith app, and I see it on there, and I'm like, well, the volume's there the day before. Let me get ready to get back in the next day. And sure enough, that's what happened here on 11/2, where I bought some more shares. It went down initially. I got the jingle on my phone, and I said, oh, heck no. Because I saw the volume coming in, and I knew it was just trying to shake people out before it went, and I rebought pretty close to where I did even after taking that 4% hit. So I just hung in there, that OHDL, hang on for dear life, and then let it ride. Now that I've gotten into a big takeaway from the Oliver Kell class was the candlesticks for me. I've been studying the heck out of that book he recommended about the candlesticks by that Steve Neeson. So not that I saw an engulfing, bearish engulfing candle after this top here. It's just because I had my stops raised as I went, because I'm not willing to let those gains come back. I tend to ride it, pretty tight. Once I hit 20%, psychologically, I sell 20% of shares just so I capture a profit. And then I let the rest of it run. And of course, it came back down. So it stopped me out on the remaining amount of shares that I had. So I've just been tracking it ever since, looking for another entry for when I think it's going to get ready to go. Just because we're in a confirmed downtrend right now, I just haven't been making many moves. The odds aren't in our favor, so I'm just kind of testing theories right now, getting little paper cuts on things. So I am still tracking this one, and we'll get back into it kind of like I did with Zim earlier this year. And that's kind of how this one went. And so let me flip this back over because we got past the chart. I had actually posted this one in the forums for other people to see. I don't know if it was helpful for folks. And then I carry like a paper sheet where I'm jotting down little notes as I go. And I have a little post analysis sheet where I go over the emotions. I get greedy because I do like to watch it and document in my journal. I know there's a little bit of greed going on. That's why I keep those stops tight. I'm not really willing to give back the gain after you get the money. For me, I felt it was an overall good trade, and then I need to improve my entry points. With improved candlestick analysis, I will, because that's helping me with some of those clues and errors. I've literally tabbed out that book, and I use another one I took away from you guys. Being an older person, I don't know if the younger people do this. I literally carry a paper. There we go. I carry a calendar with me during the day, and I journal every time something buys, sells, or an alert goes off. So I'm learning how to control the amount of alerts, because I've gotten tripped a few times where I had like 3 alerts go, where I'd put thinking volume's taken off, and like, I don't know, CPA did it to me in May where it does a squat, or Zim did it the other day where I thought it was breaking out, and then it comes back in, and I'm like, man, there goes another 4%, but hey, I can't control. That's my thing on this stuff is I can control where I enter. I can control where I sell. I can't control what the market does. Right. So that's why, it's just like, hey, I thought the odds were in my favor the other day. So that's kind of how I rolled, did it with this one as well.
Ray,
Richard, you got anything?
Yeah, I got a few things. So was your first buy as it broke that kind of little flag within the base? Was 1021 your first buy, or 1022?
Right here, I lined the dots up with it. Right there was the first buy.
What was the setup that you were using at that point?
The cup and handle.
The cup and handle. Okay.
Maybe it could look better on Market Smith. So right in here is where I was trying to load as many shares as I could.
Mm-hmm.
And then it came back a little, and it stopped me. I didn't get all of them in before there, but once I saw it finish the handle, I also use or I bought a copy of that Encyclopedia of Chart Patterns, so I understand their statistics on the failure rates of some of these breakouts and stuff like that. So just because it's in a cup and handle doesn't guarantee it's going to take off. So a lot of times I'll wait for that handle to finish forming, and it seems to make a little tail before she starts to drift up. And it seems to be pretty consistent with that pattern when I go through the Market Smith charts, when I compare it to other leaders like Zim and some of the other ones that I've done this with.
Yeah, this was a tough one, especially near that breakout point, the pivot point, because it took out that Ignite bar low, but volume was lower. And if you're kind of keeping your stops on a closing basis there with a 10-day, that would have kept you in. But yeah, that's tough in the moment to deal with all those reversals and then shakeouts and then the gap up the next day. So I really liked your sell on this, because looking back in the chart, actually before this base forms, it had kind of a similar run where it's up 30% in just a few days, and then that's kind of the end of the run. It kind of starts basing from. So from a sell perspective, I think you handled this really nicely as it got that extension. So you sold it all on those extensions, pretty much 11.5 and 11.4.
Yeah, I didn't know it was going to do this right afterwards, and
Yeah.
Now that I'm looking at it with candlesticks, I'm like, oh, this was the clue to sell for me.
Yeah.
But I didn't know that at the time, so I was just using my stops. So my stop came in, and I called the choke point. So William O'Neill's book talks about that 20%, and then they like to take a break. So it's kind of a choke point where I want to let them run if I think they're going to go, which I thought I had a good opportunity to do so. And if you look at the time frame on this, we had just come out of the correction here into the early November. So I thought it was going to keep going. And that's why I only sold 20% of shares and then put the stop on the rest of it, because I was going to let it run. It just happened to pull back. And when it pulled back, it actually has just continued to pull back.
Yeah.
So the stop did what it was supposed to do, but if it kept going, I never would have hit my stop.
Yep, absolutely. And just want to point out for people who like to use the 10-day moving average on a closing basis, that would probably kept you in until this kind of character change day. And then we had an attempted breakout of this pivot, which failed. That would be another warning sign. And then we're just kind of leaking lower, and we're just in a basing pattern at this moment. So yeah, I think the sell part of this was handled pretty well. Yeah, Ray, you got anything?
Yeah, I mean, one of the things I'm noticing is right near when a stock wants to start basing, one of the character changes that we see right away is these unfilled gap up candles. So that's something to watch for. Again, that's very similar to when a stock wants to start its uptrend. We see an unfilled gap up right there, right? So unfilled gap up to the upside, that's a positive. Unfilled gap up to the top side, that's a negative, because that means the stock is just trying to change character. And I'm seeing a lot of that now that I'm looking for it on near bottoms and also near the top side of charts that want to enter a larger basing pattern. So take those a little more, when you see those, you could be a little more aggressive with your sell rules, because the probability, like this is a character change this day where it gaps down and it's an unfilled gap, even though it comes back in, it sort of, runs out of steam, forms a pivot right here, fails at the pivot. And then now we get a deeper base because the markets, market pressure and the individual stock pressure both come in. Again, that's another unfilled gap, right on that candle. Now it's trying to, get through that, but it's sort of having trouble at the moment. So that's another, unfilled gap here. It had trouble, came back down. Maybe if the market continues to be bad, this one might roll over right back down. And then this could be something I'm not sure if this looks like the 50-day to me. So maybe it comes back into the 50-day and figures out a proper basing pattern for itself. So
Okay. Okay. No, that's very helpful.
I don't think I have anything else. I think that's a fairly well executed. I like the fact that you use the weekly to get the accumulation versus distribution. That is one of the things that Ross is really big on when he's looking at proper bases. So a base with higher accumulation than distribution, he ranks a little bit higher. Well, he ranks it much higher than a base that it has neutral accumulation to distribution or even negative for that matter. So
Okay.
yeah, I got nothing else on
that. I guess one last question. Do you use any shorter term chart patterns within the overall cup and handle? Because you're looking at on the weekly chart to identify the cup and handle. Is that right?
Yes. And then I'll go in here and I'll look at it, and then I'm watching the action in here, and I have to. So I kind of like use the weekly to identify, and then I start working the daily, just because I use shorter stops. I have to get better entry points.
Right.
So because I'm doing that, I can't, and because I'm not there at the time, like on the day it breaks out, I could be in a crawl space.
Yeah.
So that literally happened on AMD when it went on the first shoot up out of its cup and handle. So when I got the jingle, I'm in my phone, I'm in like a crawl space. I'm like, I got to figure out a better system for this. So my alerts and stuff, and because of the tight stops, I'm running 2 to 4% on my positions. I'm really trying to load on this front side here, and then about the 50%. And then if it goes and it turns into a longer position, I'll start to load more later on down the road. I just haven't gotten to really a long position. I haven't really been able to hold anything over 30 days or 45 days, just because of the way the market's been so choppy. We can't really, nothing's really staying over 20% for a longer period without a pullback of some sort. Like NVIDIA, I've been in and out of a couple times because of that. So
yeah, one little entry thing, kind of a short-term tactic in here. You've got a little bit of a flag right in this area. Can you see my annotation?
Right here?
Yeah.
Yes. Yes.
And just kind of looking at the price cycle, Oliver's price cycle on a short-term time frame, you've kind of got the reversal extension to the downside. Then we form kind of the wedge pop pivot right through this high, and this would have been a good spot to start building into it. Then we've kind of got an EMA crossback, and then it reconfirms, and that kind of starts to move up. So that's just one thing, just looking at the chart, that stands out to me.
His class has really helped me. Like being able to go back and rewatch the first class is now that I've gotten it, I've been at this for about 6 months, and I'm starting to have not performance, I'm in the consistency. Like I'm starting to weed out the bad things, and I'm starting to do little self studies on myself. So that like over 10 trades, where do I need to make a tweak? And that is one of the things out of Oliver is that first class on these entries and the crossbacks. And that's where the candlesticks come in. So like I'm doing the test runs or self studies on the candlesticks right now, and also on these entry points. Like I've moved up in my in MarketSmith, my stalking list. Actually, I'm pushing up to the top. RS strength is what I was really putting up here up at the front because we were in correction. I'm actually starting to push up to the top the KMA bunch ups, so that I can catch these things and just sit on them. And it may never break out, but you know what? I'm only 50% in the position, so I got funds for other stocks where it might be closer to. I just don't know because I'm not there, and I don't want to be missing them. I'd rather sit on a stock for 45 days. It didn't break out, than be like, well, FOMO, it's taken off today. Let me jump in without doing any kind of pre-analysis.
For sure. And one of the things you said is you pre-plan. I think full-time, part-time doesn't matter. It's best to sort of plan it all out. Like you're just, when the market opens, we're executing. We're not planning. Planning is done when the market is closed. So full-time, part-time, to anybody listening here, it doesn't matter. Just when the market opens, it's about execution of what you planned. It just makes things a lot easier unless you're a day trader and looking at volume, momentum, and things of that nature. that's a different story. But if you're a swing to position trading type of time frame, execution at 9:30 Eastern, market closes at 4 p.m., you start planning when the market's closed.
It helped me when you guys taught that planning, and that's why I developed those worksheets, because I'm prior military and I did recon in the military on the front lines. So I know what it's like to go into a battle having a battle plan, and then the bullets start flying and it goes out the window, just not completely. So I'm like, I got to do what these guys say, have a plan, and then I can make adjustments on the fly. So that's where, like, I have the plan pre-written, and that's why you saw me on that day when I got shaken out on the breakout day. That's where I had already knew, like, hey, let me see how the volume's looking. Oh, it's just shaking everybody out one last time. I feel it's like a rocket ship. It builds up a bunch of like steam, and it's trying to take off, but it didn't. It kind of pushed down one last time to get rid of the weak holders, and then it really took off. And when it round trip, or when it kicked me out, I looked and said, no, there's too much volume to pre-cut the last few days. Let me just give it another swing. And so I did. And of course it just kept going. And so I got, I want to say I took advantage of the opportunity based on what was going on, the evidence prior to. I don't want to say I could predict that it was taken off, but I said the edges in my favor. Let me roll it.
Well, cool. I think that's all I got. Ray, do you have anything else?
No, that's all I have.
Yeah, perfect. Yeah, thank you to all the presenters. You guys did awesome. This I love doing this post-trade analysis. I think we'll try to do this more regularly, and I think it's helpful for everybody involved, even if you didn't present. So thanks to everybody who's stuck with us on the Saturday morning, and especially thank you to all the presenters. And yeah, we'll see you guys in the next one.